Hola a todos, estamos aquí con Boston Andes Capital para presentar este proyecto que llamamos de Benjamin, un proyecto multifamiliar muy interesante. Y les presento a Jim Hughes, CEO y fundador de Boston Capital, y a Bree Ager, que lidera el proyecto que hoy nos van a contar un poco más.
All right, guys. Again, thank you for your time and thank you for being with us today. This is as we said, a quick talk and chat about the Benjamin, this amazing project that we're all supporting. But obviously, I'd love to start a little bit from the beginning of BAC, right? Boston and this capital, how it started, how you all came about, and you have an amazing experience behind it. So, Jim, I'd love to hear a little bit of your background and BAC.
Thank you very much, Daniel. I'll just tell you a little bit about who we are and where we came from. I We are a small boutique real estate service company that focuses only on finding, structuring, and offering investments to wealthy individuals with a large focus and deep roots in Latin America. We have a large majority of our investors come from four countries of Latin America. Our involvement with Latin America started with me when I was a professor at a business school in Chile for 3 years. And after that, I have worked for over 50 years in looking for real estate equity investments for individuals, initially for many years for US investors, for properties of all types in all parts of the US. And then in the last 20 years, we formed Boston Andes Capital to initially develop and acquire property in Latin America. But after 10 years of that, we were successful, but we found it quite frustrating. And we found a very large number of Latinos in the countries where we were working, which was Colombia and Argentina, who wanted to invest in the United States and liked our style of full disclosure and one by one project analysis. So we started basically, although our company is 23 years old, we started about 12 years ago to find opportunities in the United States, mostly in the eastern part of New England, because the conditions there they're not very well known in Latin America, but they're very attractive relative to other parts of the country for a number of reasons that we could explain. But that's where we focus. We've done about 35 projects in that period of time. We've had very good success. We've generally outperformed liquid portfolios or any kind of real estate portfolio because we prefer to structure projects on a one by one basis where we can look at the strengths and the weaknesses. We can look at a large number, hundreds of projects, and select two or three per year and really say, this is an opportunity we want to invest in. And we structure an investment and then we invite others to co-invest with us on the same terms. We think it's particularly in New England a very sound proposition, and it's not as long term. If we can sell, stabilize, and then you can either hold for the long term if you get really good, cheap long term debt, or you can sell at a very favorable price because New England is the favorite of the big institutional multifamily housing buyers. We try to avoid all pre-development risk. We don't want to bring investors into a project until all of the uncertainty of design and contracting and approvals and the site, all of the site issues are understood, so that when we bring investors into a project, we build according to a plan that's 100% done and contracted for on a guaranteed maximum price basis in a market that looks very strong to us. In New England, the pre-development process can take many years, 5, 6, 7 years, and we won't come in until it's ready to go into construction at the end of that pre-development period. I would say the size of our projects are generally between 20 million total project costs and 100 million total project costs, sort of the middle market. We find it's easier to find better opportunities in that zone, and it's a good zone for an offering of the equity, which in our equities are usually between 5 and maybe 30 million.
Absolutely.
And
Let me jump in there, Jim. Just want to highlight a couple things that you said that I think are really important. One, especially for Latin American investors that don't really get to invest in New England, and I'm going to dive a little bit deeper into that. But another thing I wanted to just comment and highlight is that this particular opportunity that we're going to talk about already has the pre-development process done, and that's very interesting to investors. Not only that, but it's almost capitalized, and so the project is for sure going ahead. So I want to jump into Bree for a second and ask her a little bit about the project so that she can introduce the Benjamin to everybody. And I'd like to ask you, Bree, just like tell us a brief description of the project and highlight the as it is, right?
Sure. So the Benjamin is a 364 unit multifamily apartment rental development in Worcester, Massachusetts. And a couple of the really compelling features of this project in particular. Number one, which we've talked about, we like the market. In general, in New England, it's very difficult to get projects approved, and it takes many, many years. And so that keeps the supply very low. So high level, that's why we're really focused on multifamily development right now, especially with construction costs and debt costs increasing recently. It's been difficult to make projects pencil. And so we feel when we can find a project that pencils, and I can get into some of the compelling features that allow this project to look really attractive, it makes a lot of sense to move forward because there is not a lot of competition, especially right now going on when new construction starts are quite low or historically low. So that's kind of high level generally why we like the market. Worcester specifically, why we like this market is because it's the second largest city in New England. It gets pretty overshadowed by Boston, but it is in and of itself a very large economy. There's, 10 or 15 large universities, medical institutions, and in and of itself, it's a very thriving life science cluster that feeds off of Boston, but also on its own, kind of stands on its own as a life science location. And so there's a lot of biomanufacturing, medical schools, all of that. And so we really like the demographics there that are very similar to Boston and to Greater Massachusetts. We have a lot of young professionals. I think over 50% of the population is under 35 years old, and that's our exact target demographic that we're going for with this project. So location is great, so that checks the box. The team is also really important to us. We look at a lot of projects and a lot of developers, and we try to pick the groups that are the most specialized and focused on that product type, and have deep industry experience in the product type and the location. And so we're working with two developers here. The first one is the Michaels organization, which is a large national developer. They have over 80,000 units under management. They develop multifamily market rate housing, student housing, military housing. So they have a very good experience in developing projects, and are pretty focused on New England right now as well for all the reasons we just talked about. So they are national, but they have a team that's extremely focused on New England and has many, many years of experience up here where there are some unique elements compared to the rest of the US that make it a little more difficult to build. And then we also have a local developer who's been very instrumental in doing all of that pre-development work that we just talked about that takes many, many years to get done. And so they have assembled all of the parcels. It's multiple parcels that we're purchasing to build on. They were able to achieve a really attractive tax incentive agreement with the city of Worcester, which has lowered our expected real estate taxes by about 70% over 15 years. And that's a really big reason that the numbers are working. Like I mentioned before, that's not something that any other group has or can achieve today. We also are able to surface park the project because we were able to assemble quite a few parcels near our site, and that significantly lowers construction costs because we don't need to put structured parking under our project. And so between those two things, lower construction cost and lower expected taxes, we're able to bring down our expected costs very significantly compared to a comparable project. And so that puts us in a really good position to build to a good yield. So those are kind of the three high-level buckets. I would say the market, the team, and then a couple of these great cost-saving tactics that we were able to achieve make the project really attractive to us today.
Bree, quick question. Tell us a little bit about the building itself, right? The development. So, the
Sure.
number of units, who is it for? This is going to be rented out, and so
Yeah.
what's kind of the outlook on how the rents are now in the market and the
Yeah.
expectations around that.
Sure.
Yeah.
Yeah, so we have 364 units. We also have 364 parking spaces. This is a Class A multifamily rental apartment project. So we have all the amenities that would be expected from a Class A project. And so we have a very large courtyard in the center of the project. So we have a lot of green space, which I think is very attractive and also something that is difficult to achieve in downtown Worcester, where we have a great site that is directly, 2-minute walk from the train station, but is a large site on the other side of the highway 290, and so that allows us to achieve quite a bit of green space in the center of our project. We also have a lot of co-working collaborative spaces and also individual work from home stations. That's something that a lot of renters these days are looking for when work from home is quite popular. We also are expecting to have quite a few students, medical students, and things like that who would like a space outside of their unit where they can go to study. And then we also have, a lot of very collaborative game centers, lounges, outdoor grills and fire pits, a dog walk and run, play area. So, very attractive and standard amenities for a young professional set, which is the group that we're targeting. So like I was mentioning, the city of Worcester, their population is very young. There has historically not been a lot of Class A multifamily apartment options for them. And in just the past, couple of years, we've had 3 projects totaling about just under 800 units come online in Worcester. They've been renting very, very well. They have rents at about $360 per square foot, which is where we're targeting. So we're basing our projected rents off of these comparable projects that are going to have quite similar amenities, similar finishes in the units. As far as unit mix, we are offering studios, 1s and 2 bedrooms. Those are the unit types that we have found are in demand and missing in the Worcester market. And again, because we're targeting the young professional set, we don't think we need larger units with 3 or 4 bedrooms that might be more attractive for a family. So that's the group we're going after, and the amenities we offer. The kind of interior design of the project is kind of a modern industrial look, kind of feeding off of, we're in a little bit more of an industrial area that is becoming more residential. The city of Worcester also has a little bit of a kind of gritty past. It has it's been an old textile city in the past. There's a lot of breweries and bars, and so we're kind of feeding off the vibe of downtown Worcester for our design.
That's very, very interesting. Jim, I want to go back to you and ask a little bit more about the context of Massachusetts or New England or you talked briefly about how people don't know about it, and so I want to ask you basically two direct questions around that, which is first, why is that an area that you guys have focused on? What attracts you to that location?
In general, New England is the worst state in the union from the standpoint of ease of getting approval for a new project. It's very, very difficult. And all the neighbors have a say. The government has 54 hurdles you have to jump over. And so in Latin America, if you buy a piece of land, it's fairly easy to get approval and to immediately begin development. In New England, it is very, very difficult, and consequently, the supply is restricted. There are fewer really new, good quality Class A projects. So what we do is wait until the developer that we respect, that we've selected has got all the way through that pre-construction project, then we have something of great value. It's an approved project. Whereas in the Sun Belt, it's more like Latin America. It's easy entry. So what you get in the Sun Belt is you get overbuilding. You get a lot of population coming in, but they're low income population. And then you get overbuilding and you get rents going down because people can't pay them. And you get, vacancy. If you look over the last 50 years at Boston, they really haven't had a cycle for the ups and downs of multifamily housing market because the supply has been restricted and the growth has been good. We have very robust economy and it's a very attractive area with high income, very highly educated population, so that we have a higher ratio of average income to rent level. The people in the Southeast have lower rents, and you'd think, okay, they're going to rent up faster. No, because they have lower income and they have too much of a supply. That's that's really the most important part of the argument. But beyond that, you do have a lot of infrastructure that is proposed by the governments of the state, the city, and the federal, and how you fit into that infrastructure is really important for a site.
What excites you most about this opportunity in particular? And
Yeah,
I know we
well,
went over the approvals and the city. I know
I have been
that's quite
living in Boston since 1971, and I would say for the first 20 or 30 years of that, Worcester was a disappointment. It was a boring second level city. In the last 10 years, that's all changed. Turns out that a lot of engineers live to technical people and engineers with high incomes live to the west of Boston for a number of reasons, or in southern New Hampshire, which is very close to Worcester. Southern New Hampshire is attractive for a number of reasons. One of them is there's no income tax and there's no sales tax. I really like the growth and the transition of the area, and suburbs are much more attractive, suburban and lifestyle area than downtown Boston. But downtown is a wonderful place, but the housing has been tremendously restricted because we have ideas like rent control that no developer wants to go ahead. You have obligated union, which drives the cost of construction up. You have a very high land cost, which means you have to build high rise, which means steel, much higher costs. So the suburban multifamily has really done much better and is much more feasible.
back to the project again. What are the main risks that you would share about the project, and what also
Yeah,
what supports the financials behind, the numbers that we've seen, which are very attractive. And as Jim was saying, they're on the conservative side. I'd like to know a little bit more about the assumptions and
yeah.
how you look at it.
Okay, the things that I worry about. Look, there's two big risks in a multifamily housing project. One is will you build it on schedule and on price? And number two is will they rent? Will they come? So will you build it is very well protected by virtue of the fact that we have a guarantee maximum price contract from a very good builder, his guarantee. On top of that, we have the guarantee of Michael's, which is very large financial base, and both are bonded. And however, that doesn't protect you against the potential for delay. And good managers. That's why the quality of the developer is really important to avoid any kind of delay problem. It also, I would say, there's a new risk that has recently come up, which is if Trump decides to go on a tariff war with Canada, we're going to use wood in this project and we're going to buy the wood from Canada. And if it costs 25% more the subcontractor, the carpentry subcontractor, is going to have a big problem. I don't think it will happen. I think it's more bluster and bluff than anything. If it does, theoretically, we don't have the risk they do, but the carpentry subcontractor probably would lose so much money on a 25% tariff that he'd have to say, look, you're going to have to give. And that's a risk. I would say why the numbers are good and why they're conservative is a lot of why the numbers are good is because we have a little more leverage on this project. Normally we have a 65% leverage level or 60. In this case, we went up because we found a source that was, we thought, very unusual and worthy of adding leverage, and that's the ground lease. And the ground lease costs basically less than 5% in the early years. If you're on a ground lease, does it affect your sales price? And in view of that, we put a high cap rate, higher than normal. I also would say the rents have been going up faster than we project. I don't think that will persist forever, but I do think there's a lot of pressure, upward pressure on rents. There's a lot of room to grow in Worcester with the rents and new people coming in. I don't know if that answers your question, but
Absolutely,
those
yeah.
are the risks and the answers to the risks.
I'll speak a little bit more to the financials and some of our assumptions that are underlying that. The first one being, we're projecting a 36-month time period. So 2 years to build, 12 months to stabilize. Both we and Michael's agree that, we like to be merchant builders because there are large institutions that are willing to pay low cap rates for Class A multifamily housing, especially in New England. In reality, at the end of the 3 years, we'll look and see if it's the right time to sell, or we could refinance for a low fixed rate mortgage and continue to cash flow the project. But because there is generally and has been so much demand from institutions for this product, we'll likely sell once we stabilize. So we feel really good about our rents. We're not being overly ambitious with them, and we're not putting high, rent growth that we have seen in the past. We're not projecting that to continue, like Jim mentioned. And then, we also, there really isn't new product that is under development right now. And so when we do deliver in 2 years, we expect to be, kind of the newest and the only new product in the market. The 3 projects that I mentioned that are in lease up right now will be stabilized and be older product by then. And so we think that those will be really good comparables for our project, but they'll be, likely be stabilized and fully occupied, and also older than our project at that time. And so we're projecting, 20 to 25 units per month absorption, which is right in line or lower than the other projects that are going through lease up right now. And so that's where, some of those projections are coming from.
I was just going to add one more element to why we have better numbers. The benefits that the city has given us are better than any other project and better than they can give in the future. And it includes 15 years tax abatement worth $13 million and less than the normal amount of affordable housing, which disappears and becomes market rate at the end of the tax abatement period.
Absolutely. I had never seen that kind of tax benefit before at a multifamily like this. So that's absolutely amazing. And I think we've covered a lot of ground. I think we've gone over most of the questions we had. But Bree, maybe the last thing I'd like to ask you is about how has the market responded to the project in terms of the fundraising process and how far down the road are we towards that capitalization? And then lastly, what are the time frames for an investor to, decide and close the loop on this and, hopefully be as excited as I am and push and be a part of the project?
Sure. So our ground lease and our construction loan are fully in place and committed. And then as far as the equity goes, we are continuing to raise the equity. We'll we have to close on the land by March 9th.
Great to hear. And again, I think the last question is you guys have to tell me again how you say Worcester or in the correct way, because people in our office say Worcester, Worcester. So yeah, I need the
No,
correct
I'll tell
response
you,
to
I I am from Ohio, and we have a Worcester there, and it's pronounced the same way, Worcester, Worcester. However, in Boston, it's Worcester, Worcester, like
Worcester.
Wicked Worcester.
Well, guys, again, thank you for so much for the time. I think we covered everything that we had on our plate, and this is going to be very useful for everybody, not only to learn a little bit more about the project and basically what's behind it, but to also in a digital way meet you guys. And I'm definitely looking forward to eventually get all the way to Worcester and get to see the new vibe that's coming out of that downtown area and the whole city.
We are always available to answer questions or participate in conference calls or receive visitors who want to see what's going on here.
Thank you guys again, and talk to you soon.
Okay, thank you.